Here's your market update. War is far from over. Trump is no longer willing to do an extra ceasefire for another 2 weeks. Back and forth between US and Iran agreeing to talk tomorrow. Well, nothing has been planned. We say JD Vance took a flight yesterday to Islamabad, but it hasn't happened. And the US is now willing to use military in Iran. That 2-week ceasefire way for the US to better align its troops, more effective on the ground, and deploying soldiers in Iran. In terms of data, we had the Canadian CPI yesterday and the US PPI last week, and both show that inflation is not yet felt in the economy. So 2 options. The one is we are overestimating the impact of this war and it's not going to have something significant on the economy. Or second, the data are not yet pricing the full impact of higher inflation. 2 of the biggest oil trading companies in the world, Vitol and Gunvor, were saying that 2.5 million barrels per day have been disrupted since the war started, expected to double in May. Gunvor is saying another 2 months, which would be 3 months of disruption of the strait, would cause a global recession. All of this is already starting to be felt in Europe. And today we had the German ZU economic sentiment, which is the sentiment of the different companies, which are levels that we have seen right before the Russia-Ukraine war started. Considering this huge impact of inflation and the overvaluation of indexes, I decided to reduce my exposure on indexes and potentially hedge myself. If you want to know more about this, go and check my last YouTube video. It explains everything. Comment video and I'll send you the link. That was Sandro and that was how to think and train like a finance pro. As always, have a good day on the market.